Hello, everybody, and welcome back. It's your boy Lumenaddy, and let's get right into it. Today was intense on the charts because yesterday, when we left off, we said we were in an overbought stochastic RSI setting, and there was a chance price could test certain retracement levels, and it did test those levels today. And our recommendation at the end of the last video was to put our buy targets, our entry targets, somewhere between the 50 and 61.8 retracement levels of this retracement that we had drawn. And we had recommended, if you wanted to be really conservative, to wait and see if the price would have bounced off the 76.4 retracement. And for the daily candle, it did close above it. It closed at 53.57, and the 76.4 retracement level was at 53.51. So it did close above it barely. But today's candle, the next candle, which is still forming, seems to be bearish, and it very well might continue to blow past the 100% retracement and touch this retracement level over here, where you have a confluence of two retracement levels, one being from the retracement that we drew from the all-time high, current all-time high, to the lowest point of that dip. And that level is the 61.8 retracement level. And that has a confluence with, if you go to the weekly chart, it has a confluence with I believe, the 50% level. Yes, with the 50% level from the ultimate retracement, which I believe we covered in video 1. So whenever there's a confluence of two retracement levels, that generally is a draw for the price to move to that area, acts like a magnet. If the price happens to be in that in the vicinity of that confluence, and so the price could very well dip down to this area. One interesting thing that I wanted to mention from yesterday's video to today, where we had talked about the cup and handle formation, we had expected our cup and handles to be at the 6,000 level, but what it seems to me is that when we look at the volume drastically dropped. So that it seems to me like the market, everyone else in the market, or maybe the whales in the market, determined that this should be the level for the cup and the handle. So it seems to me like this is the potential cup, and we are currently in the handle formation, which we had previously stated that could be at this level over here, the 61.8% level, and it could very well be, or it could be a little bit higher. But still, both completions, whether it was a little bit higher or this current cup and handle formation, would still confirm a bull run, right? And what are the other signals that could kind of indicate towards a bull run? It would be on the 4-hour chart. If you look at the 4-hour chart, we are in an oversold stochastic RSI, and that also supports a reversal. However, I wouldn't be surprised if this just has a big blip down here with the long wick coming back above this level here, which would be 100% retracement of the short-term RSI that we drew from a daily candle. I'm sorry, short-term retracement that we drew from a daily candle, which was covered in our last video. So my expectations are that we are going to see a large bull candle that is the size of maybe 4 of these bearish candles over here. This retracement, this dip in price, along with the drop in volume, to me is just consolidation from a bull run, and just to gain enough momentum to break through our big 6,000 barrier that we had earlier talked about in our previous video. So, what is the game plan short term and long term? Well, let's see. If you had entered in your trades, if your trades got activated from the 50 and 61.8% level, I would hodl. I wouldn't panic. This right now we are in such a beautiful stage in Stellar. Any buy is a good buy. Whether you bought at the moon, whether you bought yesterday at the levels that we discussed, whether you're going to buy in today at these levels, these are all good, safe hodl prices. For day traders, you can add into your previous position today, and the average would be a lower total buy-in, or you could just wait. You could just observe. You could just it'd be a hold. Today would be considered a hold if you're concerned about where would be an entry point. Personally, you could if the price dips down to this level right here, that's a safe entry point, I think, which is at 5014, right? If it's there, that's a safe entry point. If you see on a 4-hour chart, if you see a long wick forming after touching here and closes above this level, which is 52.15, that's another safe buy. Do I expect the price to drop below 5,000? No, I don't. I think there's enough validation at this level for this level to be considered a new support, because it was a previous resistance level. I think we discussed that at yesterday's video too. So usually previous resistance levels become the new support when the price dips back down. So this level seems like a safe buy-in for a short-term trade, and obviously you can collect your profits at any of these levels over here. 5203, 53, 51, 54, 43, 55, 17, 55, 91, 56, 83, and all the way up to 58, 31, or you could just hodl all the way through. So I think that should be our plan going forward. Obviously, to get an indication of whether price will continue to dip down, move up, look at volume. Volume, we were expecting for 1.5 billion volume, similar to what happened in January, early of this month, when we saw prices go up as high as 91, 93 cents. You had the constant upward movement in volume, along with the price action showing a strong bullish run. However, we did not see that right here. We saw a huge dip in volume, which then corresponded with a dip in price, which could just very well be collecting profits, waiting for it to hit a key and a new support level, and then everyone buys back in to rage and race past the 6,000 level. So those would be my recommendations for today. To recap, hold would be the overall recommendation. If you want to be aggressive, just go ahead and put in a buy at the current value, at the current price, which is 52.38. Or if you want to be very conservative, you can wait till it gets to 5,000 and put in a buy there, and expect, and we're hoping for this handle formation to come. Also, the other thing I wanted to mention is on the daily chart, the candle that from yesterday to today, that candle, it closed above the 76.4% level. And I remember I said that if the candle will close above the 50, 61.8, or 76.4, that's still reassuring us that price will continue to move on up. So that's where I'm taking my solace in. I believe that we are setting up for a nice handle formation, being that our cup just completed. And that's what's going to be looking for at the next video. So we'll see y'all tomorrow. Keep a lookout for these prices. Hang in there. Don't panic. I know FUD sets in anytime we see consolidation. But overall, I think we're in good hands, y'all. So we'll see y'all tomorrow. Take care. Peace.